fibs, right? So I'm gonna just show you my fib settings. Sorry, I'm gonna show you my fib settings just so you could copy this. I'm gonna have a photo for this as well. Inside. All right, I'm gonna have a photo for this as well inside the back office as well, just so you can have access to it. Let me just screenshot this as well. This is my current fib settings at time of the video. Now I want you to keep in mind that TradingView does update, right? And from when I learned how to use it, it was just one straight line, right? So sorry, just for screenshotting this. So all this was just one straight line and not two columns. I don't need you to worry yourself about how much columns it is. I just need you to make sure you have these numbers ticked with the box. And by doing that, let's say all these boxes were off, right? You just check the box on and you just enter the value of the numbers you see on the screen. Now I'm explaining why I have these colors green, right? And these colors are green because these are my take profit levels. These would be the levels of my take profit on my Fibonacci. Now I'm explaining how I use my Fibonacci. I don't use my Fibonacci on a monthly. You can, but I don't use it on the monthly. I'm going to show you right now how I actually use my Fibonacci, right? So I'd use it in confluence with my 4 hour, my 1 hour, and then I jog in on my 15 minutes to look for entries. Now this is how we're going to use our Fibonacci tool, right? Let's mark this up real quick. Let's just do a quick markup just to show you something. So let's just say I was marking it up. Let's say this isn't here. And to do that, let's just put a box there just so we can't see it. For some reason, this computer is lagging right now, so family, please forgive me if it is lagging in the video. I do have another video loading up in the background, so that may be why. I'm on my Mac and not my Dell. The processing speed on this is 16 gigs, yeah, so that's probably why as well. So what I would do, right, is I would look and I would see, all right, cool, right here is my resistance level. I would definitely mark that off. All right, here we go. I marked it off as my resistance level. And then when it comes on here, it forms a support. And what I do now is mark this off as my support zone. All right, beast. Now, what I'm doing is looking for another entry to see when I could get in for a sell. So what I would do is, because it found the support, I want to drag my Fibonacci, if I'm looking for a sell, from the relative high to the relative low, and I drag it from wick to wick. So my 0% would be on the last wick, right? And what I'm going to do is I'm going to drag it. There we go. Right here. Now, what this does for me is let me know where the market is going to retrace to, and I'm going to explain this right now, all right? So 23.6, 38.2, 0.5, 0.618, 0.764 are all retracement levels, right? When a market getter, you can expect it to retrace. And by retrace, meaning whatever direction you have this in, it will go that way. So because we drag it down, we can expect it to hit one of these retracement levels and do a retracement. Let's say we dragged it from bottom up. We can expect it to come down, retrace to that level, and shoot up, right? So based off my 4-hour Fibonacci retracement level, the reason why I have these golden is because I only look to get in these areas, right? My 0.5 to my 0.618 is the only place I really enter in if I'm using the Fibonacci. Now, I don't just use the Fibonacci to enter, but it's one of the confluences I use, all right? It helps. So 38.2, yes, you can get a rejection off of this level, and it is likely for it to happen, right? It is likely for it to happen. So don't ignore this level, but I don't pay attention to it. I don't pay attention to it, honestly. But you want to use other analysis to determine, right? So we see it came here and it consolidated for a minute. Each one of these candles is 4-hour candles. And if you look at the 4-hour candles, we have a shooting star candle right here, right? And this is a sign of a downtrend. And then it consolidated for a minute. This right here, it formed a new resistance level. Because when it forms resistance, it has to have a bullish and a bearish candle, which it did. It did. So now we're going to be sketchy. All right, cool. What else is giving us some form of signal that this is going to retrace following this level, right? And by doing that, you would use other confluences based off of what you have learned from the previous videos, all right? That's very important, very, very important. But I don't enter off of my 4-hour either way. So what I'm going to do is still have this box right here, right? What I'm going to do is, so we're not going to see this right here. We're not going to see this because let's imagine this didn't happen yet, all right? We only imagine it formed a new support and is now retracing up. Now what we're going to do is we're going to delete that. We're going to change this color of the box just so we can know what it is. You could change it to whatever color you want. I'm using this color so I could know what it was because on my 4-hour, I always use the color orange, right? I'm going to go down to my 1-hour time frame. And this is where I'm going to pay attention to more detail to look and see, all right, cool, where the market might actually retrace from, right? So let's go back over here. So what I will do is right here is a support level on my 1-hour time frame. So what I would do actually is right here. My bad. So I'll draw that out as well on my 1-hour. And because it's already there, I wouldn't do it anymore because I already have a box there. But right here, it formed a level of resistance, right? Right here, a bullish and a bearish candle. It retraced, came up, then it finally came down. So what you would do is on your 1-hour, I would put my line right here. If you are on a Mac and you're on TradingView, the shortcut for horizontal is Option H, and you automatically get a horizontal. I'm just going to make this line blue. Let's make this blue. Then what I'll do is I'll draw my Fibonacci from this wick to this wick right here. Sorry. This wick right here. There we go. As you see, when it came here, it retraced up, came to the 0.50, almost touched the 0.618, came back down. It smacked TP1. Up here, it smacked TP2, and it smacked TP3. So 2.36 is my take profit 1, 0% is my take profit 2, 0.25 is my take profit 3, 0.618 is my take profit 4. Whenever it hits take profit 1, I take partials and I move my stop loss and profit. As we see, if we moved it in profit, it wouldn't have hit it. It would have came close to it, came back down, smack TP2, came back up a little bit, then came back down, smack TP3. We would have taken partials at all these and we would have moved our stop loss and profit. So it would have taken us out eventually. Yes. Came back up. It looked like it's up on an uptrend. And what we could do, this is how you could catch smaller moves, right? We know obviously this is a downtrend. So what you don't want to do is be in a trade too long. But what you can do is catch this uptrend, right? I don't recommend counter trend trading until you get a bit better, right? So let's say you drag this right here. Boom. I found a new support, new resistance, right? So what you would do is I use my long tool. I would draw it, drag it on my 50% retracement tool. My stop loss is always 15 to 20 pips. So let's say 20 pips right here. Well, right now actually 10 to 12 pips, but I do 15, sorry. I do 15 to 20 base time on some pairs, right? So let's say we enter that in, and because we are counter trend trading, I would not do it to TP4, honestly. Counter trend trading, I always just do it to TP2. Let's put that here. That would have been 31 pips, risking 20 pips. That's a 1 to 52 ratio. It would have came close to our stop loss, but not hit. You want to worry about your entries if you're going off the Fibonacci when it gets in the middle, honestly. when it gets in the middle. But it shouldn't get here if you are doing it, well, on a 15-minute, it might get here because, you know, the candlesticks are really shorter on the 15-minute. But let's just say you don't want it to get to the middle, right? When it gets to the middle, you want to start worrying because your trade might be going in a wrong direction. So what you want to do when you get here, let's come here, is you set your pending order for a buy limit. You drew it up here where it formed a new resistance because you're watching it. It's coming up. Don't enter right away. I'm telling you, be patient. Set your pending order. It came, gave you a bit of profit, came back down, gave you a bit of profit, came back down, and look, voila, boom, spank TP2, spank TP3, spank TP4. But I would have closed from right here. I honestly would have closed from right here, honestly. But let's look at some more examples of drawing it on your chart, right? So I don't enter on a 1 hour, but that was an example. So what I would do is go to my 15-minute, honestly. I look for entries on this level, but I have my markups drew from the 4 hour, the daily, and the 1 hour. This helps me when it comes to using my Fibonacci properly. So let me give you another example. My computer is lagging super hard. So what I'll do is, as we see, okay, let's go back to the 1 hour just so I could highlight the area. Okay, let's look to see when we could catch this drop, right? When it hit our resistance area. Let's come right here, highlight this area right here. All right, awesome, 15-minute. All right, awesome. So what we would do when it get at our resistance level, we would be patient and wait. Now, honestly, based on other tools and other stuff I taught you, you'd be able to determine, all right, cool, it will basically drop at this level, but we're just going over the Fibonacci video, right? This is just going over the Fibonacci. So as you could see, it hit it, came down, hit it, and it finally came down. Now what you would do is, this is when you would take out your fibs. You take out your fibs to look for a sell. This is on the 15-minute. I would drag my fib from the relative high to the relative low. Make sure you're taking notes. And I drag it out, right? Boom. It came down. What I'm doing is looking for another re-entry in this zone right here. So what I'll do, I would take my sell tool, my short, you know it means sell. So you just come over here to access it. You click short position, and I'll put it on my 50% retracement zone, right? And if I'm on the 15-minute, I honestly drag my TP to about 12 to 15 pips, no cap, because I don't just use the Fibonacci to enter, but sometimes, you know, when you're doing it, I use this as well. But let's just use the Fibonacci, do my 12 pip stop loss, and I would drag it to TP4. Honestly, I drag it to TP4 when I'm doing it based off my 15-minute. And if it's obeying the trend as well. Like, you always want it to be a multiple confluence, right? And as we could see, came down, smack TP1, smack TP3, smack TP4 before it came back up. So it would have stopped us out if you are following the rule of moving your stop loss and profit. Some persons don't move their stop loss and profit. As we could see, it still didn't hit the stop loss either way. So even if you didn't move it, it came down, boom, smash TP4. Smash TP4. This comes with patience, right? Patience. And I'm going to have another video for this, but I'm just going to mention it in here as well, right? A lot of persons say, oh, entries. When I see my stuff in negative, I close it. If you're closing your profit in negative because you're scared you'll blow your account, that means you're over leveraging. You don't need to be over leveraging. You need to be risking 1 to 3% of your account per trade. That means if you have a $100 account, you should only be risking between 0.01 to 0.03. Honestly, it's patience. It's patience. But this video is not about that. Let's continue on. Some more examples of the Fibonacci. Let me come off of GU and go into, AU, go into a different pair. GBP, JPY, my favorite pair. I really only send signals for AU. I don't really take it. I trade GJ, GU, US 30, and getting into gold more. I haven't sent signals for this. I've just been taking it myself. But let's use this for an example, right? Let's remember, you always want to look at the trend first. Always look at the trend. Don't take it just based off of because you have the tool. Let me reset this chart. Here we go. So we could see it's obviously an uptrend on a daily. So what we're going to do is come down to the 4-hour. See what's going on here. All right, cool. We see what's going on. All right, let's go down to the 1-hour. We're looking for entries for a buy. But let's observe this. Right now it looks like it's consolidating. It's in a ranging market. So what I would do to catch ranging market moves is, of course, where's my horizontal line? Is I set my support and my resistance, right? So that'll be right there. Set the next one blue because we're on 1 hour. Awesome. This one right here. Let's see if there's anything right here. All right. One more. Because remember, support and resistance are just areas where price had an indecision, right? All right, awesome. So what I'm doing right now is I'm going to be looking for buys. So I'm going to go back to my 4-hour. I'm going to come down here. And you want to draw a Fibonacci on one push. Something like this you would not draw a Fibonacci on. You want it to be one push, right? And this right here is one push. One push. So what I'll do, I'll take out my Fibonacci tool. I would draw it from right here to right up about here. All right, awesome. So we could see this is our golden zone. What I'll now do is go to my 1 hour, see what's going on down here. Zoom out a bit. All right, so what I now would do is take out my Fibonacci again on my 1 hour, drag it from this wick to about this wick right here. Wow, look at that, inside that zone right there on that support. So if we got in, as you can see, price is right here right now. It would have came up. It would have came up, and this is on the last market price, right? Today is, you all could check this as well yourself. You go back test this and see where the market went, March 20th, 2021. So you could come back to this day just to see where price went, right? So now let's go to the 15-minute. Now, do not trade off just using a Fibonacci, all right? Do not trade off of just using the Fibonacci. Please use other tools. Use candle analysis, use the confluence, which you're going to learn to use in a later video. So now we already know it was telling us in this area right here. Then when we drew it on the 1 hour, it told us this area right here. Let's see where it tells us on the 15-minute. This is where we're using as a confluence. You wanted to confirm on all our time frames. Wow. Wow, perfect entry. So if I saw this like right at that moment, I honestly would have get in right now. Honestly, if I saw, and this is a pair I traded and I knew where the market was headed, I would get in right there. Do a 15 pip stop loss. I probably would have do 20 because it's on resistance. Yeah, I probably drew it right there and drag this to TP4, which is about, let's see up here, 68 pips. And we could see what market does on Monday. Well, Sunday actually. You honestly could see what it does. But that's how I would draw my fibs so far. There's going to be a 2.0 for this video. I will have also the photos, the screenshots of my fib settings inside this course as well. So don't worry if you didn't catch it. You don't have to play the video back. I'll do it. And I'll always send my updated fib settings inside the group as well. But that is how you draw your fibs and you look for entries. Remember, always set pending orders. Always.